doing after work.
Gary in Wyvale, Ontario has a question about a U.S. tech company that's out of favor right now. Go ahead, Gary.
Hi, David. I'm interested in Intel, mainly as a trading vehicle, not necessarily as a long-term hold. If you like it, would you buy the stock today, or would you buy a put a little bit out of the money, and how far out? Sure. Thanks. Bye.
Sure. So on Intel, let's talk first about the tech group as a whole. Large cap tech is performing reasonably well, and certainly a beneficiary of liquidity. One of the concerns we have about the long-term strength in this equity market is there's a couple of key groups that are underperforming. One, I talked about transports, and that's more truckers, and FedEx had not great news today.
Right.
And the second group that's quite economically sensitive, has been a good tell over the last few years, has been the semiconductors group, because their inventory turnover is quite quick. And so you get a good read on end demand in the market. The semiconductor index as a whole has been underperforming, has been unable to make it back towards highs while the S&P 500 has. And in that group, the 500-pound gorilla is Intel. And, you know, Intel's off from sort of $30 to $29, $23 over the last 4 or 5 months. So, again, I don't like to buy the lagging group. And even within the semiconductor group, there are a few that are behaving a little bit better. But in general, I think you want to be a little bit careful here. This is very dependent on global growth. The other big issue is that PC still is a soggy market, and there's some that are concerned that, you know, Windows 8 may not have as much punch as people are hoping. So I think I'd sort of stay away from it. And if you think there's any risk in equity markets later in the year, I'm not that prepared to sell a put. To have somebody sell it to me if it falls in price. I think that there's better places to be.
All right, David. Diane's on the line in Toronto with a question for you. Go ahead, Diane.
Hi, Mark and David. My question is on Agrium. I have approximately 1,000 shares, and I paid $77.50 a share. It's now trading at about $100. Agrium is now having a bid through a Dutch auction, and they're offering the low price of $95 and a high price of $107. My question is, should I tender my shares or hang on to them for now, hoping that the price will go higher?
Okay.
I'll hang up and listen to what you have to say.
Thanks, Diane. You've done well so far.
Well, yeah, good for you, Diane. Let's take that question in two parts. First of all, let's just talk about Agrium. I talked earlier about chemicals companies and the big win they're having because of the low natural gas prices, and certainly Agrium fits in that camp. Nitrogen, you use a lot of natural gas to produce nitrogen, and so their feedstock costs are low. On the other side, there is a pretty strong bid in the agriculture space because of the high grain prices over the course of this year. You know, Agrium, both its fertilizer and it's got the retail business, which is also doing quite well. So they recently said that they have seen this market being in as strong a shape as they've seen it in a long time. So we like the sector. We own Agrium and we own CF, also another nitrogen producer. Dutch auction. Very often around a Dutch auction, once it's done, you will see a little bit of a pullback in the stock. If you had 1,000 shares and you put it in the Dutch auction and you got a certain number of shares taken up, you might decide to sell the rest of the shares after the fact. I think that should be short-lived. We like the group. I would stay with it. I don't think it's behaving well just because of the Dutch auction. I think that there is a theme in place in the group. And so, you know, use a stop. But I think that you want to continue to own it. 50 days down around $96. Hasn't challenged the 50-day in a while. I think that likely it's going higher.
Should Diane maybe take a little bit off the table just to lock in some profit? Or just, I know you like to let your winners run, right?
Yeah, there are very few key core themes in this market, and agriculture right now is one of them. I would stay with the position.
Okay, an email on GE now. This is from Ron. What's your opinion on General Electric, which has been perking up lately, hitting some higher levels?
Mm-hmm. So GE, first of all, technically is set up very well. Stock's just broken out to new highs. If you looked at a weekly chart, which would be a little longer than the one they've got on the screen now, you'll see that it's broken out of a very large consolidation. GE is an industrial, and it's in a difficult space, but specifically big beneficiary from the growth in natural gas and potentially big growth in LNG. So in gas turbines, certainly a big win for them. So you know, it's not a world beater. It's going to be probably a little better than market perform with less risk. So risk reward is pretty good in the stock. I'd be comfortable owning it. We own a little bit in our global portfolio, and then we've just hedged currency back to Canadian dollars.
What about the likes of 3M or some other? You mentioned the chemicals company. What about some of the other industrials?
We have very little industrials exposure right now because stimulus has not yet shown through into significant change in industrial production. In fact, industrial production figure has been quite weak globally. Last week's number in the U.S. was particularly weak. So we've stayed away from the industrials as a whole, but there are a few leaders that I think you can take a look at, and GE is one of them. All
right, David. Here's Marvin. He's in Welland, Ontario. Hi, Marvin.
Yes, good evening, gentlemen. David, I was wondering what your opinion is on Loblaws as a holding for the consumer staple portion of your portfolio. I had previously owned Metro, and I've held that through the 50s as it's run up, and I've now liquidated my position, and I'm now considering Loblaws. And given their introduction of Joe Fresh and their looks like potentially successful marketing of that line, what you would think of that stock as a consumer staple?
Sure. Marvin, I have to say I like to stick with the leaders, and I think that you're probably better off in a Metro. And frankly, if I had to pick one, I'd probably go to Whole Foods in the U.S. I think they would be a more attractive investment. Loblaws at some point here is going to get it turned around. It's been a long grind as they've been going through lots of restructuring. I'm not prepared to make a big investment there yet.
Do you hold Whole Foods?
We own some Whole Foods. We don't own any Metro.
We will take a short pause here with David Burrows. More calls and emails and tweets on the other side on North American Large Caps.